All right, good morning, everybody. So, in the overnight hours, apparently, Russia signaled a withdrawal, and the market liked that pullback of troop movement. So, we started to get this bump to the upside. There are some headlines showing that the Russian military is still performing exercises, or Russian naval forces are still performing aggressive military exercises. So, there are a few conflicting headlines. Kind of want to maybe keep your eye on those. Otherwise, we got some economics on the table for today. You really do want to keep your eye on the dollar and the bonds, especially with the PPI number coming in. A lot of times when we ask the question, what's moving this market? The answer is almost always directly connected to a headline in the news or an economic event. So we come over to Thinkorswim, start with Market Watch. 8:15, 8:30, 8:55, and then 10 o'clock. Right? So those are the time frames you really want to pay attention to. I can't stress it enough. The clock is one of your greatest assets as a trader. One of the best indicators that you can get. And most traders that I know that start out new don't even imagine looking at the clock, let alone paying any attention to it. So you can see this green dotted line. That is the daily 20. We're back above the daily 20. We still have the daily 10 over our head. We've got the weekly expected move and a cog line at 45.11. If we look at where the volume is at, we've moved back through that shallow area, but now we're starting to get into a little bit of this price structure back here. And the higher up we go, the more resistance we're expected to see as we get into that volume. We do have an inside day breakout. So when you look at it from the perspective of the higher time frames, the higher charts, we are completely outside of yesterday's range. We've already broke through the Globex low of the day before that. So we're going to be dealing with any of the pivot points from Friday, including Friday's point of control, value area high and low. So that'll be any of the overhead pivots to deal with, including that 10 daily, though. I mean, that's going to be a big one. When we get there, we really expect to see a reaction in the market, just like the first time we got to the 20 here. First touch rejection. So we've got an ADR right now close to 2.5%, and we're only up 1.5%. So we very easily could make it another 1%. Kind of try to price that in. Just use your drawing tool from the current location, add 1%. You can see that'll get us challenging the 10 DMA, 10 daily moving average. Ouch. Yep. You know, when we were going into the close yesterday, I almost sold another Amazon call, and I decided, no, I think I'll just hold on to my naked call, my long call, and not cover that thing. Yeah, I haven't looked at Amazon this morning, but I'm glad I'm not short. I am short a bunch of Apple, but Apple's been getting kicked in the face anyways. All right, one of the things we do have to be concerned about is, one, we do have the economics coming in. So that's on the table. And two, we've seen the game before where we rally up really high And then we open and we start that move to the downside thinking, oh yeah, we always go to the downside after we've gapped up because we're trying to close the gap. And this is too big of a gap to close. So it's only going to attempt to try to close the gap at the open. We're going to see those red candles come in and we're going to be thinking, oh, they're just red candles trying to close the gap. And then it just keeps falling and falling and falling through the morning. And we keep trying to catch that knife and just take loss after loss after loss. So we have the bullish bias coming into the open. Everything that I'm going to be showing you is going to tell you that we're really risk on, pure bull mode, alpha protocols. But don't imagine for a second that it's going to stick and that it owes us that all day. Keep reevaluating the situation. We talked about this yesterday in the futures live stream room about having your daily checklist and going back and reevaluating through the day. Should I still be bullish? Is my bias still sticking? And then we go back and check those same things that we look at, right? Advancing issues, money flow. We look at the sectors, look at the other indexes, and continue to reevaluate and ask that question, should I still be bullish? So don't think that this is going to stick just because it is at the moment really bullish. Another thing that's worth noting is when we get an aggressive expansion like this, a lot of times the market will want to come back and reset that expansion before it does whatever it is going to do, right? So for an example back here, deep drop to the downside, it reset that expansion and then it continued to be bearish. This is a move that we see all the time, right? Right back here, deep drop down, it reset the move and then continued to be bearish. It can do it in the bullish side just as easily as it does it in the bearish side. Back here, sudden, sharp, immediate move to the downside and it reset. And it lost that bearish bias in the reset. It didn't continue the negative move and instead went up. So when we get these very sharp, very steep, very sudden drops in the market, really watch for those reversals. Think of it the way that I was taught to see it. Think of it as though there is a gap. And we know that there's not a gap, right? I mean, obviously we can see the candles, but think of it as a gap that needs to be closed. We know that all gaps don't get filled right away. Sometimes gaps don't get filled for years, but in the grand scheme of thing, on these smaller time frames that we're looking at, if we imagine that that is a gap, then it's just a gap where we see price trying to fill that gap. And there really is, it's kind of a liquidity gap, right? It causes a liquidity vacuum, and then we reciprocate back up to fill that void, to fill that vacuum. So we do have to, have a little bit of concern because of how fast and how sharp we moved away from that level. All right, the Nasdaq, we've got a very similar chart. Looking at my note here from yesterday, this Fed meeting, I don't know if they snuck away when nobody was looking, or I looked around all day. There never was any report about their meeting, and I don't know if they just never came to an agreement during that meeting, or maybe they made an agreement and they just didn't want to post it yet. I don't know. They did have the meeting. We just didn't get anything out of it. At least I didn't. I never did find anything. I don't know what I don't know what to do about it. So we're still kind of on the hunt for that. We do have that same push here in the Nasdaq, and of course we want to check the volume. You can see that we're coming right into that volume resistance. It is very likely going to start to stall here. Right now, remember, if this is going to be a trend day, right, and so far everything's pointing to the fact that it's going to be a trend day. If it is going to be a trend day, maybe use the candles that make it easier for you to see a trend day. Because one thing I hear from people is, well, I got scared and I kept getting out, or it kept shaking me out, or I didn't trust the move. Turn your chart into a Heiken Ashi chart, or turn on Renko bars, right? Those kind of candles are designed to help you stay in the trend, and it's only a visual, right? Just keep in mind that if you change your chart to that, you can't use any candle reading skills, right? As soon as you go to Heiken Ashi candles, that's not real price action. So then you can't read price. So then you're probably going to want to have more than one screen so that you can see Heikin-Ashi on one screen and regular candles on the other screen, or range on, Renko bars on one side and regular candles on the other. Right? If you don't know how to get it to a Renko chart, hit the gear icon at the top and go to time axis. I don't know why it's here. It took me forever to find it when I was new, and I knew somebody had told me there was Renko. I looked all over the damn place. I looked in appearances. I looked everywhere. It's in time axis. You go in there and you change it to range. And then they ask you, well, what kind of range do you want? Do you want range bars or Renko bars? Set it to Renko bars. For the futures, I usually like to go about 1.5, so about 6 ticks. Just run that thing back to 6. That's my spot. Mine isn't yours. Maybe kind of fiddle around with it and kind of, find your sweet spot. In the Nasdaq, that sucker moves, right? So I have turned this thing up to like 2.5 points before. That puts you at around 10 ticks, maybe 12. Just go at 3 points. But for the ES, when we were getting, like 30-point days and 40-point days, I had this set at about a 6. Just fiddle with it. Try to stick a number and stay with it for, a couple weeks if you're going to start to transition into using something like Renko bars to kind of get used to it. Nobody is ever going to give you a good number to use. You're going to have to fiddle with it for yourself and find one that suits you. We are coming up against that 20-period daily moving average. Remember, in the ES, we're already above it. In the Nasdaq, we're not yet above it. The 10 and the 20 are almost combined. If I was to turn on the precession of those 10s, it would very likely show that the 10 is getting ready to cross below the 20, right? It's not, I'm almost positive that if I turn it on, it wouldn't show the 10 just came back above the 20. So this needs to hold, stabilize this low and see price move up, or we're going to see that 10 cross the 20 to the downside. And that's going to be a negative signal. All right. Speaking of negative signal, when you look at the on balance volume, that's not looking too hot. No. Right. And we've got some real divergence in there. Now, divergence, when it comes to something like the OBV, you really don't want to trust that on anything less than, say, a 30-minute or a 1 hour. Otherwise, divergence really just is something, it's going to be so common, you're going to see it everywhere, and that's going to give you misleading signals. So if you're going to look at divergence, make sure you're using the higher time frames. If we line up the pivot point here with the pivot point of our current location, and especially this pivot point right there, we had a lower low in price, and we had a higher low in the pivot. So this pivot point and this pivot point over here should be lined up. The candle that we're on right now isn't closed, so it hasn't begun to move up yet. So the volume in the Nasdaq been a little bit of concern. This matches into that same discussion as before, where there is resistance. Just remember, it's not volume resistance anymore, right? It's not any kind of trapped traders resistance, because we've already came to that level. We've been back and forth through that level multiple times. It's kind of lost its respect, but it's still an old volume area, right? So it doesn't have any trapped traders. We're not looking at it from that point of view, but it does have old volume. It's the same volume that we're looking at on that volume profile, only from a bigger perspective. If there was such a thing as cog lines on the Nasdaq, which there's not, the Nasdaq doesn't have cog lines, but if there was a cog line on the Nasdaq, that 14,500 area would be a spot where I would say that there's a cog. So this also is a real ugly inverted head and shoulders. If we were to measure this ugly inverted head and shoulders, we'd be plotting out a 100% move basically where we are. So it's almost an entirely completed pattern. Keep your eye on the dollar and the bonds today, guys. It's absolutely critical. It's going to be your heads up spot, right? This thing is going to give you early warnings more than anything else. And the ramifications of all of these Fed situation, the energy market, Bitcoin going nuts this morning, the pullback in Russia, All of this is really affecting the global perspective on the dollar, where nations are hiding, right? Because they're not going to go to cash. So we want to look for any exaggerated or extreme moves in here. Keep your eye on the VIX. Make sure that it stays decoupled from the dollar. That if we start to see a move in the VIX or the dollar, that they're not moving in the same direction, that they don't have the same charts. The Nasdaq has an average daily range of 3.25%. We've only made 2%, which means we could easily make another 1.25% or even 1.5%, and it wouldn't be considered an outsized move. It wouldn't be considered a big move, right? So at the moment, while it seems like we've traveled a long ways, we could easily travel another 1%, and it would not even be considered unusual. So, kind of plot that in, just use your drawing tool, reach up 1%, and you can see that gets us near that 14,500 area, or excuse me, 14,700 area, right? So we'd be back above the 10, back above the 20, and that would be a good way to close out on the day, right? To be back above those major moving averages. It's going to be a fight to get back through them. You can see we've already hit that 20 and pulled back from it. That's our first touch rejection. We're very likely going to have the same rejection at the 10 if we happen to ever make it that far today, anyways. Sooner or later, we're going to get there. Look at the sectors this morning, sort them by what is up and what is down. Bitcoin has come off a little bit from its earlier highs, but it's still up a significant amount. Behind that, we have the jets, the airlines, and then the marijuana sector, technology, biopharma, communications, finance, which I really hope finance doesn't finish its run too early this morning. This is a red to green setup. And I talk about these red to green setups all the time because they're one of my favorite plays. Yesterday was a red day on the financials, right? So we're looking here on the daily chart at the XLF. As you can see, those three candles in a row to the downside, all red. Well, we've rallied in the pre-market almost all the way back up to where we closed yesterday. This is a red to green close signal, right? It's a great day trade setup. So what we want to see if I can find one here. When it comes to a red and green setup, we want to go from a red day yesterday to a green day today, and we want the green day today to start at or above yesterday's highest point or yesterday's starting point. So here's a perfect example. If we're still on the daily chart, we have this red candle here, closed near the low of the day. In the pre-market the next morning, we rallied up and opened very, very close to where we had closed or where we had opened the day before, right? So the opens are almost identical. There's no wick to the downside here. So we opened and the financials just ran straight to the upside. If it did start to fade back, that's why we want to be above yesterday's open. If it does start to fade back, we want to see it find support on yesterday's open and then rally up. This red to green setup very often produces a 3.5 to 4% move, right? So it's got a great outsized move connected to it historically. It's an easy pattern to see. You just go out to the daily, identify a red pattern, preferably in an upward trending market that has just, suffered a little bit of a pullback. And then we're looking for that rally, that continuation on the next day. Well, if you look at the financials this morning, 3 days in a row, we've had that downside move. Even if this is just a dead cat bounce play, if we open here yesterday's open, we have the potential to rally up at the very least to the Friday open, right? So there's going to be a lot of red to greens this morning. It's a part of the whole alpha protocol setup that we're going to be focusing on a lot of these. Looking at the pre-market, you can see we're already above yesterday's open on the financials. And from the way it looks, we're entirely above yesterday completely. The Globex, the high, low of the day, all of it, right? So we've got an inside day breakout on the financials. So this is what we call an inside day breakout with a red to green setup. The more times that you can say and, the better, right? That we can say we were in an uptrend, we were pulling back, and we have a red to green setup, and it's an inside day breakout, right? And it's not just financials that are making the run, it's all the other sectors that are making the run with it. The more and you can bring in there, the better. Emerging markets, industrials, healthcare, building materials, almost every single sector is up this morning. And the ones that are all up more than 0.5%. Metals and mining is down. Kind of makes sense. The ones that were doing good are now going to take the beat down. And energy is down this morning again. Now, IGV is what we've been using for like expanded technology names. That's what it is. It's an ETF that looks at the bigger tech names. And cloud is another one. Both of those are kind of showing flat. They're not super liquid products to begin with. So it doesn't really surprise me that they haven't moved around much this morning. They did do relatively well yesterday. And that kind of fits the narrative that anything that was doing good probably is not going to do good now, right? We're getting that rotation of capital out of metals and mining and back into, say, technology and the other sectors that were beat down. When we come over to trading view, we got the S&P 500. We want to filter this down because we don't want to look at 500 names. It's a little tricky. Try to just get it close to 100 names. We want to sort this by pre-market change percent. And we're just going to adjust the color scheme. Notice it's using a whole number, 3210, right? Well, it will stay gray until we move 0.5%. So Johnson & Johnson, for an example, is up this morning near 0.5%, but it's still showing gray. So we want to adjust the color scheme to be a little more responsive. To do that, just hit the 1x, move it from a whole number to a decimal point, and now it is a lot more responsive to subtle changes in change percent. You see just what we had already pointed out, energy and materials, metals and mining, they're the ones getting whacked this morning, but healthcare is not looking too good either over there, right? A lot of the chip names are lined up looking good. Transportation is a little weak too. We often just lump technology all into one box or into one basket, but you can see that health technology isn't looking so hot this morning either. Right? And on the retail side, Lowe's and Costco. Lowe's really getting beat down. Costco's kind of a little more flat. Lockheed Martin down over 1% this morning. But look at all those chip names. Texas Instruments, Qualcomm, Intel, NVIDIA, AMD. Oh, they're all just lit up, right? We're talking some big moves in there. Let's take it over to the Nasdaq. Pre-market change. We don't need to filter the names because we're already looking at 100 names. Kind of get the same perspective here. One of the differences between the Nasdaq 100 and the S&P is financial names, right? The Nasdaq 100 does not have financial names. Now look at the financials here in the S&P. We're pretty much lit up across the board. I mean, there's a few names that are a little weak, but otherwise, financials are lit. Well, if we see some exaggerated moves in the dollar and the bonds, we're going to very likely see impact within these financials. And I would much rather short something after it's up 2.5% than try to short something after it's already fallen 1.5 to 2%. Right. So if I'm going to look to short any of these things or short anything in the market today, this will be what I'm targeting. not energy, which is already at the lows. So when we try to quantify how many names are up this morning, how many names are down this morning, what sectors, what industries, where do they belong? Look at the Nasdaq in a 1% move this morning. How much of the Nasdaq 100 has made a 1% move or better to the upside? 45. So 45% of the Nasdaq has moved more than 1% this morning. That's a real bullish number. Usually we look for at least 1/3, right? Around 33 names or so, 34 names. We got 45% of the Nasdaq up more than 1% this morning. If we drop that number down and say, well, just how many of them are up at least a 0.5% this morning? 54. Now that number I would have expected to see a little bit higher, something in the 70s, maybe into the 80s. So it probably wouldn't hurt to revisit this through the morning, especially when we get closer to the open and after we've already had some of those economic numbers come in. When we're looking at these numbers, we're trying to filter down or narrow down the scope of what we're going to try to trade at the open, right? Which is where that alpha protocol comes in. The protocol is where you identify a trend day and you run the highest market cap, most liquid stocks at like a 35 delta call across the board, right? And if it's a negative day, then it'd be on puts across the board, right? Same thing. So you end up buying in 8, 12, 15 different companies with those calls, right? Because if it is a trend day, if it's one of those rip your face off rally trend days, and every single sector is up, and every single industry is up, and every subsector is up, and you've got 9 out of 10 names moving to the upside, you can basically just throw a dart at the barn. You don't have to try to get slick and go in and identify, oh, what's hitting my scanners and should I get into Visa or MasterCard? No, should I get into American Express or Wells Fargo? Yes. The answer would be yes, all of them. Get into every single one of them, right? That's the idea behind it, right? Alpha protocol. You want to make sure you're right before you activate the alpha protocol, or you're going to be buying into a bunch of calls that are all going to sour and go to hell on you, and that sucks. Don't do that. Looking at the S&P, how many names this morning are up more than 1%? 47. So 47% of the S&P this morning is advancing more than 1%. If we dial that back and say, well, how many names are up at least a 0.5% in the S&P? 65%. Oh, that's getting into that bullish number that I was looking for on the Nasdaq. 65%, more than close to 2/3 of the entire S&P 100 is up a 0.5% this morning. That's some good bullish numbers, right? And one of the things that this provides is what happens if they're on the wrong side, right? We were kind of talking about this yesterday in the futures. What if they're off sides? Alternate thesis says we're going to crash and burn and reset that move to the upside, right? The original thesis says we're going to continue this bullish move and maybe just stick the landing and stay range bound for the rest of the day, right? So if that's our original, if that's our original case, if that's our first blush scenario, that we stay range bound or that we continue this bullish move, what's the alternate theory? The alternate theory would be that we dump back down, back to where we came from. If 3/4 of the S&P is already moved up at 1% or more, and we go to do this reset and start moving to the downside, 3 out of 4 names are going to head to the downside, making that same aggressive move, right? It would like be an alpha protocol in the other direction. Something to think about, right? Continue to look for any signal that's starting to show that reversal. For anybody looking to do a swing trade, be very careful. We do have the FOMC minutes tomorrow. This is not another meeting, right? This is not another meeting. It's just a it's like a stenography post of what was talked about in the meeting, right? They had somebody in there recording it, getting the minutes, getting the notes, taking, uh, writing down votes, writing down what they discussed. Well, after that meeting, they printed it all up, and those minutes are going to be released. That's coming out tomorrow. Now, you would think since he's already came out and chipped his teeth and talked about what they talked about, that nothing would be new tomorrow, right? But he doesn't always share what they talked about. And then there's the perspective of what, you know, what did they discuss that he didn't mention? Who voted on things? How close was the vote? Right? Those kind of things, those nuanced details get examined in excruciating detail. So when these notes come out tomorrow, these FOMC minutes come out tomorrow, you really want to watch that, because the market could see something in there that he did not do a good job explaining or touched upon during his presser, and we'll see the market respond from that. Otherwise, other than that, we shouldn't really have any more problems for the rest of the week. We do got some PPI coming in, uh, but I don't think that's our PPI, right? Kind of check to make sure. No, that's not ours. We don't have to worry about that one. All right, guys, be careful, be safe. It's Tuesday. All you got to do is make it to the end of the week, right? And we're almost halfway there.